What is up? Welcome to the October 2023 market update. Well, I think we're actually going to finally get some cooler temperatures here in Phoenix over the next week or so. I think next week we're supposed to be down into the 80s. We've got Halloween coming up, trick-or-treating with the kids. It's a great time of year here in Phoenix. I'm sure what is on your mind right now is what is going on with interest rates, because I think that's what everybody wants to talk about right now. I'm watching the news, we're getting phone calls and emails, and there's a million things happening. But this is the first time that I've seen an 8 in front of the average 30 years fixed interest rate. For some people, they're like, yeah, it's already been 8. And for other people, they're like, what are you talking about? We just got a mortgage and it was only 7.6 or 7.7. Well, first of all, as it relates to the news, they're just taking an average based on what's being reported into them by the mortgage companies. And so from that standpoint, there's gonna be higher and lower based on current markets, based on your credit score, based on a lot of things. But as it relates to the individual Phoenix market and how loan officers and lenders get paid, that's actually really where we see a lot of the big difference. And this is where there's a big misunderstanding in the marketplace. So I'm gonna give you guys a specific example that we just ran with 2 different mortgage companies so that you can see how big the gap can actually be and why it makes sense when you're thinking about buying a home to shop around a little bit and make sure you're getting a great mortgage rate. So we just ran this sample scenario a few days ago with 2 different mortgage companies. Mortgage company A and mortgage company B. It was a $700,000 fake purchase with 10% down, so $70,000 down. The person had great credit and no issues qualifying. So they qualified for what we would call a conforming rate. So mortgage company A's rate was 7.625, and they had $995 in lender fees. Mortgage company B had a rate of 8%, and they had over $3,000 of what they call rate buy-down fees, plus an additional $1,500 in lender's fees. And so ultimately, when you don't shop around for a rate, you could actually reduce the quality and the price point of the house that you're able to qualify for, thus having to settle for a much lesser house than you would want, just because you got quoted from a lender that had higher rates. In other words, they were making more money doing that loan. So where do you get a great mortgage rate? One great place to start if you're looking for a mortgage is a depository bank. We've got a couple great people we work with that work at those banks, and oftentimes their rates are much better than they are if you're gonna go to a mortgage banker. Those banks make money a lot of different ways. So they make money from lending money on different things, from having investment accounts, from doing all these different things. They have lots of income streams, let's say. The mortgage bankers, they only make money by doing loans, and ultimately most of them end up selling those loans on the secondary market. So they really make the money doing the loan up front and then selling it off. I'm not bashing mortgage bankers. There's some great ones out there, so hopefully everybody doesn't get mad at me. Ultimately, this is a commodity that's being sold on a secondary market, and as the buyer, you're just stuck with that extra $100 or $200 or $500 a month for as long as you own the house. But you didn't get anything different or better for it. You literally got the exact same product, it just cost you more. So that's all to say. There's so much smoke and mirrors around this, but at the end of the day, making a couple of phone calls, checking with a few different places about what your best options are. All the lenders have different products. This is gonna be the best way for you to figure out what is gonna be the best option for you, since ultimately, like I said, you're probably getting that same loan either way. I think ultimately, getting with someone that you trust, whether that's your mortgage person or your real estate agent or a family friend or somebody that knows the business really well, and talking through what you're trying to do, what your goals are, what you want to accomplish, that's the most important thing, because at the end of the day, then you can pick the right lender and loan product for you, because like I said, we can really see often right now, hundreds and thousands of dollars, too much money being spent on loans that unnecessarily, because as a consumer, people just don't know. They don't know they should be doing that. So that's what I got for today. Hope you guys have a wonderful Halloween. Enjoy it with your friends and family. Don't eat too much candy, and we'll see you next month.